Tech investors get another read on the AI trade today when Palantir reports earnings in overtime. Here to discuss is Intelligent Alpha founder and CEO Doug Clinton. Welcome back. It's nice to see you.
Good to see you, Scott.
This has to be the ultimate stock to give you a barometer of momentum in the market. When momentum rolled as a factor, this stock led the way. When the markets come back, this stock's done unbelievably well. So what does that mean for tonight?
Well, I mean, to your point, Scott, up 60% in the last month are Palantir shares. So, I mean, I think the reality is the bar has to be pretty high. You know, you look at the price action of the stock coming in, and whenever you're up 60% in the last month, I think that says that you have to really not only beat expectations, but beat them handily. And that's what Palantir has sort of been doing the last few quarters. It's not a stock that we own at Intelligent Alpha. The challenge for us is not that it's not a great business, because I do think it is. The challenge, though, is you look at it fundamentally, trades at 70 plus times revenue. And I think it's just hard to see how do you get a long-term return if you're not just trying to trade it.
What do you think we learned last week about the AI trade in general? And I ask you that in the context of what Brad Gerstner of Altimeter told me a little bit earlier today about where he thinks we are. I'd like you to listen to that and then give me your own answer.
We're just getting started. We're in the first inning. This is 2000 to 2003 internet time here. And what we heard over the last few weeks is all of the biggest companies in America continue to double down on their investments in AI, and they're seeing the paybacks.
First inning. You agree?
I might have said second inning. I would say, though, I hope we're not in the 2000 era. He mentioned that. That wasn't a great year for the internet trade. I think we're more like 1994, 1995. So I would agree with Brad that it is still early. And to your question, what we learned last week from the mega cap tech stocks, we learned that despite this consistent narrative that eventually things have to slow down, the hyperscalers are not slowing down. We're hearing consistent commentary. Amazon talking about as soon as they put infrastructure in the ground, it's already at capacity. Meta talking about new products that they're building on AI, including hardware. And Microsoft, the one that we keep kind of hearing these rumors about, maybe they're going to cut CapEx. They reiterated their numbers too. So I think the trade certainly fundamentally is intact, but I think that the excitement from the investor community has still not yet come back.
Your implication, though, is that if you're as early as you suggest in terms of those years, that it eventually ends badly, because that's what it did. I feel like his was more, we're on the other side of some crazy, and now we've really focused on the best and the brightest, the NVIDIAs, the Microsofts, the Metas, the Alphabets, the Amazons, right? We're not so much paying attention to the throw AI in your name stocks. We've actually weeded some out.
We have a little bit, but again, if you're early, I think definitionally you also have to believe that at some point it does get crazy. Because if you're not early and it doesn't get crazy, then this AI boom that we're talking about may ultimately be disappointing. Logically, as you look back throughout history and the flows of capital into these new emerging technologies, the reason that we kind of get to crazy, the reason that we get to these bubble levels is because you need a lot of capital to come in and make sure that all crazy ideas get tried, because some of them end up being really good, and also to reduce the cost of the technology for widespread adoption. And so I would say I think we're still very early. I think we probably do get to some sort of crazy level, and we're still several years from that happening.